Good afternoon, everyone. This is Manoj M from Market Ideas for Profit. And what we're going to do today is going to assess what the markets are giving us. We've had a ton of red in the last few days, in fact, week, and we're all struggling to find out what's going to happen. Obviously, everybody's talking about more weakness because of the 6 weeks of straight red candles that we've seen. And we need to look at levels because that's the only thing which will tell us, that is the only thing on the chart that will tell us what deeper, what more depth can we go to and what's going to happen in the longer term frame, in the shorter term frame, and probably the week ahead, and probably what we're going to see on Monday. So let's drill down. I'm going to make this video about the Nifty today, and probably the Bank Nifty we will take in the next video because I don't want it to be very long, but I want a very detailed discussion in Nifty because Bank Nifty is not that important at the moment because the overall market is on the Nifty. We'll discuss the Nifty in depth today and Bank Nifty. Maybe I'll have another video to talk about it this time. But I want to go really in depth and start from the monthly candle. And this is what you're seeing on your screen. Now I will go with the futures candle because that's where I transact and that's where I think all the data rests, which is significant because that's where the volumes also come into play. So if this is the monthly chart, what we're seeing is now what I've done first is I've tried to find out what was my previous swing high and what was my previous swing low in the current context. So this is the previous swing high, which was 24,7,869 odd, around that figure. The exact figure is not that important. And the swing low was roughly about 22, 250, 251. That was the swing low. Now, what we've done is we always check for the retracement. We came down and we reversed back and went above the 50% level, which was around 25,100, 25,100 or 890 odd. And then we started to face resistance when we came around this 26,000 level. That's the first resistance that we faced, this particular level, and we started to retreat down. So that's the first fib that I've drawn, and the retracement tells me that we went above the 50%, but we were not able to sustain, and we are now beginning to come down. Now, generally, as a thumb rule, the 50% level is the one where we decide, where the market decides whether it wants to continue and go towards the top, or would it want to reverse back and again tag the bottom of where it all started. This is seen in a lot of charts, and this is a significant area. So on the monthly, we're seeing that we are facing resistance between the 50 and the 60% level, and now we are retreating back, and it's a very big retreat because it's a very sharp fall. Obviously, uh, news will cause it to happen, and Trump is just one of the reasons why this is happening. But this could be the natural phenomena that we could have expected. Now let's go to the weekly and see what the weekly is telling us. On the weekly, again, just zooming in, we went up. This is the 50% level. We're down now 3 weeks in a row. And what are we doing? Are we sitting in some kind of a support? So now this is something that is important to see. And we do see that we are sitting on some kind of support here, right? This is a fair value gap that was formed. It had gotten breached actually before it started to go up. So if you see in a little more detail, as I show it to you, this is where the fair value gap uh, started, and this is very extended too. The last time, this week of the first week of May, we came right down and we took support from, practically ate up this fair value gap. We took support here and then we shot up. And we are again coming to test that same level that I will mark it for you. The same level is where we are right now. So where we went up, we took support, we're returning back right up to that area. Now this is a significant area, but if you see the fair value gap, it got completely eaten up and it got support from the lower fair value gap, which is formed. This is the lower fair value gap, which gave it the support that pushed it up. And but this time, when it pushed it up, it did not go to the all-time high. It went up to this particular fib level and it came down. So now what we can do is we can try and create another fib level, which will extend on the weeklies. So to do that, let me try and build this fib here. Let me do this. Let me bring this up. Okay. So I have a tool where I can draw my fib and get to that 50% level. This is the tool that I have custom designed. And my 50% level comes where? My 50% level on this fib from the last swing low to the last swing high and now retracement falls somewhere around this level. If you see this level, this is the 50% fib. I'm going to mark it as a 50% fib. And this is where we could see some kind of a resistance, some kind of a support, sorry. 24,100 is where we could find some kind of support back in this leg down. But generally, it's not the 50%. It's between the 50 and the 60% that you should find some kind of a support. So roughly, this is the area where I expect the price to revert back up. Now, I'm not being an astrologer. I'm trying to find out the next best support level that we have in the leg down. There are two scenarios that can happen here. We can come down right here, right? We can come down right here and build some support here and then reverse back up towards this area, which is the last area of the swing high. I will mark it for you too. This could be a target for us if we see a reversal back up from here, crossing a few swing highs. The swing highs on the way up, we eat up a few swing highs. On the way up, we head to 25,945. I'm still being optimistic, right? That's the nature of my uh, my belief in India, and that's what I would want to see. We're in a hiccup situation right now caused by Trump and his tariffs and uncertainties. That's what is bringing the market down. So this could be one area. 50% fib of the last swing on the weekly is something that I am happy to tell you that this we could be nearing our support level. Now, obviously, 6 weeks of down candle, we can have one more, 7, and that should then cause it to reverse because the law of averages says you just can't keep on falling. There has to be some retracement back to fuel, even if it wants to go down on the way down. So it needs liquidity. The liquidity must be drawing the liquidity taken here, wherever, must have been getting exhausted. Obviously, liquidity is being gathered at every pullback, but I feel that we are near that situation. Now, let's go back and see. I would like you to check this particular downtrend. Candle 1, 2, 3, 4, 5, 6, 7. And after the 7th candle, we saw a little bit of a reversal and then we fell again. So maybe 7 candles is one of the limits of getting into an oversold area. And we are into our 7th week now. 1, 2, 3, 4, 5, 6, 7th week. And then we could be seeing some kind of reversal back up. Now, how far that reversal back up can take us, we don't know, but that can give us a relief rally where we can then begin to, find what we want to do with our portfolios. This is an important area, but I think the end to the drama of these 6 falling weeks is coming to some kind of a climax at this level of 24,100 and between 24,100 and 23,874. Now, to corroborate this 23,874, I will take you to the monthly candle once again and show you that this monthly candle that we saw for the month of May ended at about 24,255. So generally, the reversal will happen just from below the monthly candle. So we could take the monthly candle and go a little deeper, take up some liquidity under this monthly candle, and then begin to rise up. That's a scenario that looks very, very possible to me, right? Let's go down to the daily and see what more detail can we see on the daily. So in the daily, let's discuss the last week. I have already given you a projection in my various videos from the last 3 weeks, 4 weeks. I've been consistently saying that we are yet to tag lower levels and we are on the way down. And my assessment has been coming true perfectly. You can go back to my channel, see the last 3 weekly analysis, and you will find that I've been constantly telling you that 24,168 is on the cards. Now, I have been telling you on stages but the eventual destination looks like 24,168. And now to me, 24,100 and 24,874 are the next stages that we could even further go down to. So I'm going to extend this line and take it somewhere in the middle. And that's where I expect this particular leg down to end. Now, what can happen on Monday? The GIF Nifty is currently resting somewhere around sub 2400, so 24,390 odd, somewhere where the GIF Nifty ended its Friday. Sorry, just a moment. I have a little bad throat, so please bear with my um, speech if you find it a little harsh. That's because I have a little bad throat, but that should not stop me from conveying what I want to convey to you. So this is what we're seeing. Thursday's action was good. It was an expiry day. We saw some short covering after it took some support here, went up, but it faced some resistance on the lower time frame somewhere here. On the lower time frame, you see there's some fair value gap here, which was the one that gave the resistance move, and we were thrown right back down again, going below Thursday's low, or was it the same level? Let me check that because that is important. Now, Thursday's low was 24,409 and Friday's low is 24,441. So we haven't yet gone to the low and haven't yet swept the lows technically of the Thursday close. So in our own chart candle theory, on the candle theory, we should be dragging ourselves below 24,400 for the time being. And from there, we could be looking at something that can give us some kind of a support to give us a small pullback into this area. From there, we could then drill down. So to get to find out what's happening on what can happen in the early part of Monday and Tuesday, we'll need to go to intraday timeframes to tell us what we should expect on Monday in the markets on the Nifty. So and the longer term trend is lower, yes, but we could see because we're in no oversold area, we could see a small pullback before we start our journey down. And that is something that we want to find out as to what's going to happen on Monday. So let's go down to the 15-minute and start with the 30-minute and see if we can see something. So on the 30-minute, you see a fair value gap, which is at a very important point. You see, this is where the last swing low was. We went higher and then we broke that swing low and it went up. But we went higher on this order block, but we could not sustain. It took resistance from this 30-minute fair value gap, the bearish fair value gap, and we came crashing down. And we have these fair value gap formations, which are the ones that we should be looking at. So if you see beautifully, this was a breakaway gap, and these breakaway gaps don't get tested. So once the breakaway gap was formed, a second fair value gap was formed, and then that's when the market went up, took resistance on that particular fair value gap and took a sniper entry and came right down. And now in the last 30 minutes, we went down very, very drastically. We took a little bit of a pullback at the end when again started to fall down. So this fair value gap was formed. Now, what we can do is we can expect the market to do two things. Either if it is really oversold, it should give us a tag back into this level and start to fall down and give us that move down, which can then take us to, somewhere around here. This is a possibility, the first possibility. The second possibility is that if we break this level, we go up and then we try to tag back into this level and then we start to go down again. Maybe, yeah, this is something that can happen. Eventually, we should go down, but these are the two trajectories that we can hope to see coming down, coming our way. And these between 24,400 and 24,280 is the level that we can look at on Monday. Now, let's look at the left and see if we are seeing something in the previous formations. If you have any fair value gaps in the previous areas. So no, there's a big, huge gap that we're seeing here. And this is the level that I think we're going to tag. 24,282. 282 is something that we can look at in the short term. So this is something that we should look at. We should be looking at 24,282 in the short run. So let's look at it. Give me a minute. I'll go back here. Yeah, 24,282 is something that we should look at. So I'm going to raise this to this level and we're going to mark it here. 24,282 is something that we can look at. So guys, this is what we have on the Nifty for the coming week, coming period and Monday. This is what I think we should get. Now, obviously, things will change by Monday, and we will share another video with you guys as to what we expect on Tuesday and the days going forward. But as far as Monday is concerned, we could see another fall. And if we don't see a fall, probably we'll see some kind of a reversal back up. And then we see the fall in the coming days of the week. But this is the destination that we look at, 24,275, and then lower down to 24,100 is where we are looking at. This is what I expect the Nifty and the Nifty to give us. Bank Nifty, I'll cover with a different video, so that doesn't get very long. This is my analysis for what I expect on the Nifty in the coming period and in the initial part of the next week. That's it, guys. I hope the video helps you get some kind of a context as to what the market can do, makes you aware of what the possibilities, and helps you take trading decisions based on the levels that I have mentioned in this video. If you have anything to share, do write something in your comments, and like the video if you find that it helps you navigate the markets in your own trading, and do share it with your friends and family. And if you haven't subscribed as yet, do subscribe, because I keep coming up with this valuable information. Do go back and check the 4 videos that I've made in the last 4 weeks and see my projections. They've all turned exactly the way I analyzed them and had them coming. That's it for this video, guys. Have a lovely end of the week, and let's start afresh and do our best to get the best out of the market in the coming period. Thank you and goodbye.